Right, hello, hello, hello. Let me know if you guys can hear me okay. Actually, let's go over here. Let's do this. Let's do over 50. Let's go there. So, new microphone today. It should be better. I was messing with it a little bit, but do not have tons and tons of time to tweak it. But it should sound better. At least in the testing it did. I have to make sure the kid doesn't get access to this one. Mess it all up again. Um, all right, while you guys are catching up to me, there's always a little bit of a delay there. We will just start rolling into things. The babies are back. They got back, I guess last night. They landed at like 11:55. Yeah, Midwest storms. They had to do the big U to get across the United States. That all down, over, and sideways kind of thing. But they are back. I swear Kip grew a little bit. He definitely seems like he's a little taller. He left with 2 teeth and came back with 5. So, a lot happens in 2 weeks. Crazy, right? Crazy. And then Jin obviously was, all bouncy and stuff. So she's like, Daddy, it's so late. I'm going to go to bed now. I was like, oh, that's awesome. So yeah, we'll see. It should be a fun day adjusting everybody to the time differences. So this morning, got a little bit of construction PMI data. Thank you, Aki. Yeah, I thought so too. Like I said, testing it sounded much, much better. I was like, oh, this is a good upgrade. And there's actually still more settings that I can mess with, like really, really dial it in. I don't know that it'll get as good as the boom mic does, but this is just kind of learning where like the microphone needs to be, and again, understanding it's the noise canceling is really what we need, because otherwise you're going to hear all the kids running around like craziness. Anyway, 7 a.m. this morning, pound did exactly what we thought it would, and I hope that. Again, we explained the 3 potential scenarios yesterday. I hope you took note of the 3 potential scenarios, because it turned out exactly like we expected. We'll explain that when it gets there. But yes, huge retail trader trap. And yeah, pretty easy to grab. Unemployment claims came in at 260, basically exactly as expected. Really no difference there. But it's interesting. You look at a lot of these, like, job cuts, they fell, they're up. It's funny. You look at the headlines and you would think that it's worse than it is, right? It came in as expected, right? But you look at some of the title, the headlines, and you're like, wow, it's up to 2. Wow, it's bad. They kind of expected that, right? I mean, they expected actually a little bit higher, so it wasn't really necessarily as bad. So that's not bad. Tonight, we're going to get to a policy statement. Again, always important. Messer speaking also. Again, there could be some headlines there that kind of bounce things around. So we'll see how that turns out. Obviously, Bailey was talking about 2 hours ago, and again, that's associated with the rate hike. And I think this is, again, a pretty interesting article if you guys are looking for it. Risks around MPC forecasts are exceptionally large. The UK forecast is that, will enter a recession later this year. Again, that's, it's not whether they're going to or not going to. It's just they're going to, and I think everybody's already absorbed that in, and, it was kind of expected, but they were hoping that they would have been able to get it under control a little bit better than they have. Like I said, they did smaller raises. They started sooner, have gone longer, and now they're going into the bigger chunks. The problem is, you raise interest rates 5 times or whatever, 4 times in a row, whatever it was, and your inflation is still getting higher up into the 9.6 range. Yeah, they need to take some additional steps. But it basically, when they did that, guaranteed recession. So again, one of the first big nations saying, "Yep, we'll be in that recession. We'll be there later this year." And I think most people will be. Economic costs of the war in Ukraine will not, deflect the BO settings for the rate hike. I think this is a very, very important thing to bring up. Again, it just seems like everything that people aren't happy about, and there's got to be an excuse for everything. And Ukraine is obviously one of those, major kind of global, I guess, contagions at this point. But it's interesting that they're talking about it, how, the cost of the war will not deflect from, our settings and rates. Again, everybody wants to help other people, but eventually you do have to take care of your own. And I think that's kind of what they're saying here, that, again, a lot of the reason why, the EU didn't do what they did was, what they should have done earlier was because of Ukraine. And all it did was make, kind of push the can farther down the road, if that makes sense. And this is interesting too, Bailey comparing projected 23 recession to prior recessions of similar magnitude to the early 90s, peak to trial around 2%. Yeah. I think these projections are always cool. You don't really know what's going to happen in here. And I'll tell you right now, this is a great projection if everything stayed the way that it did now. all of a sudden you throw some type of, instead of just Ukraine, you throw Taiwan in here as well, this will all get messed up again. So these forecasts are always fun of what potentially it could look like, and I think it's important to remember those things. No one really knows. No one really knows. There's a lot more out there that we don't. So, take that with a grain of salt. And the 50 rate rises do not mean that we're now moving on a predetermined path. I think this is a great statement too. A lot of the different, central banks have been like, oh, we're trying to avoid market shocks and telegraph what we're doing. This is interesting because they're like, listen, this is not, this doesn't mean that we're now moving to a predetermined path, right? This may be 50 and then we stop, right? Maybe we'll go back to 25. They're leaving a little bit of that, like, it could do a lot of different things in there. I think that's important too, because again, the markets, if they told us everything they're going to do right now, it's kind of hard because there's no way for them to forecast what happens in the future or what's going to change out there next. So by them saying that, listen, this is a path, we're going to follow this path, is actually, I would say, pretty bad for the currency because it shows too much rigidity. So I think, honestly, everything that Bailey said today, I think is really, what he should have said. And again, the response to it, obviously, with the pound being down here, the pound being down here, pretty easy call. And then, look at the euro pound. We talked about that surging, right? Surging yesterday, and it did. 52 is over, again, that's big for that pair. So again, did exactly what we said it was going to do yesterday. Hopefully you guys were able to take advantage of it. And that's one of those things that just, this is one of those, everybody knows it's going to do this. Really? Everybody, right? Sure, everybody does, right? And it did and bounced and did exactly what, we had predicted. So again, this is why I love news trading. When you talk about stacking the odds and the percentages on your side, and what that really looks like, right? 2 out of 3 scenario, it's better to put your money on the side where it's a 2 out of 3 opportunity chance versus the 1 out of 3 opportunity chance. Because end of the day, we don't really know, right? Nobody really knows. A lot of people out there will tell you, this is definitely going to happen. I know what it's going to do. We'll put it this way. If you know it's going to happen, you have insider information that would be illegal for you to trade on it. So end of the day, it's really all about percentages. And I'll take 2. I'll take 2 versus 3 odds 2 to 3 odds any day versus 1 to 3 odds. And then again, when it comes in the technical levels, you got to love it even more. So tomorrow, Friday the 5th, right? We have more, again, important news, right? We have all the non-farm data. So we start off with the CAD, and I think the CAD, again, CAD being a smaller nation, again, relying upon more oil, with oil prices coming back down again, it probably will affect them a bit. But rising interest rates, obviously, we know what it causes. They're talking about the employment change. The employment change is positive, meaning they're hiring people back again, but the unemployment rate is also rising. Again, one of those things you don't necessarily want to see or want to have out there. Not the favorite, right? But again, expected. We said in the United States, we're going to go from where we are right now, from the high 1.3 or the 3.9s or whatever it is, 3.8, up into the 4.6 range. So they already told us it's going to happen. We're going to make it happen, right? We're going to lay people off is the policy right now. Again, it's happening in Canada too. Actually, I'm sorry, 3.6 is what our forecasted rate is supposed to come in as. And they said they're going to take this to 4.6 before they're done. So I think it's important to look at, things here. Average hourly earnings is, again, they're increasing. It's positive. That's good. Again, inflation is still going at the same rate. This didn't follow the same way that inflation did. Non-farm employment change. This is one that I think, again, we still know from the JOLTS data that we have just under, like 10.5 million job openings. We know that there's 5 million people looking for jobs. Seeing this continue to dwindle down, yeah, there's less demand, but there's still, like double as many jobs, openings as there are people willing to work or wanting to work, right? So this is one that I think tomorrow we may get a surprise on. Going from 372, actually, was that a surprise last time? Yeah. They've been much, much higher than expected, and yet they're holding firm there, right? So, yeah, I feel like this number is off. Like, I feel like right now they're forecasting bad and like, yeah, we're going to kill job demand. And yeah, we've seen it in some of the data already, right? Yeah, but there's still twice as many job openings as jobs. There's not really a whole lot there to basically be like, yep, that's it. We're not hiring anybody back anymore. They're still trying, right? Because especially with gasoline prices coming down, this may actually not really be as bad. Like, I mean, if this comes in at 300, that's positive. That could be a feel good Friday type setting for the morning. So, and again, we'll talk between now and then. But again, non-farm is a big number. It affects all the different asset classes that the U.S. is associated with. So, yeah, there's a lot in that one. And I feel like this is just a little bit overly negative. Yes, it will come down, but I just feel like right now, yeah, it's starting to kick in, but I don't know why they would have it at the rate that it does. And unemployment rate, I don't think that changes. If it does, if the unemployment rate changes, it goes to 3.7. And in all honesty, I don't even know if 3.7 would actually make it go down. I mean, if you think about it, right? I mean, they said they're going to take it to 4.6, right? That's where their projections are setting it, right? 4.6. Does it go up a little bit, and does that really move the markets? I mean, what happens if they hire back 325 and then this goes to 3.7, right? That mixed data, what does that do to the market, right? So yeah, I mean, that's what the Fed wants. That's I don't know. Interesting take there. Besides that, again, everything has really been pound based, right? Pound a week, and whether it be or a small. Yeah, again, that's what we kind of said yesterday. Here you go. 5 ballistic missiles fired from China appear to have landed within Japanese exclusive economic zone for the first time ever. Again, China's starting to flex. Not that they're going. I mean, China is not going to go and try to take over Japan. That's not. I mean, yes, the two countries are not very, very big fans of each other. They do not like each other, but China is not going to try to stomp and roll over Japan. This comes as China canceled its bilateral meeting with Japan over the So. This is one of those things. They're flexing and saying, hey, listen, what they're trying to do is pull attention away from, kind of Taiwan is probably what it is. But yeah, like I said, China is pushing out and flexing. And yeah, this is probably in response to Nancy, and again, China is not a toothless enemy, for lack of a better word. So, let's see, is there anything else? No. Not really. Not really at all. Such banks. No, Fed. Dollar climbs as Fed support suggests a rate hike. Yeah, we know the raising rates. Yeah. So not a ton out there. Again, everything today is going to be basically in preparation for that non-farm data tomorrow. All right. So let's go ahead and let's go across. Where are we going to look at? Let's pull VIX up there. So VIX is up slightly. Again, yesterday we talked about it deteriorating throughout the day. There was no real main news, and it did. It came down, it deteriorated. It looks like, it kind of went down to a demand zone, but that's not really how the VIX works. We did take a little bit of a spike today, and again, this could be, shooting missiles from one country into a sovereign area of another one. Yeah, that kind of can get people puckering, but overall, I think it'll be interesting to watch the VIX today to see how people are kind of feeling with it. Right now, the indices are split, and I would say for anything else today, I mean, with the news, there's really not really much U.S. I mean, again, this is less than expected. Yeah, it did creep up, but it was less than what they thought it was, so it's not really as negative. That's kind of positive for the overall indices. The VIX shouldn't go absolutely crazy. Now, again, if we start hearing more comments about the missiles, then yes, it will go higher because, again, anytime there's war like that, you will. You can see that the dollar really came back, and again, we took the one bounce yesterday right around that 10 o'clock, 10:30 frame. We talked about it being just a little bit high, and really it needed just a little bit more. Made it to 106.75 and then turned and rolled. And you can see it's really just it's basing. But I would say right now, this appears to be looking like it's going to be more bearish today, which, again, could be true. Just with non-farm payroll tomorrow, if it is preparing for basically for something that is supportive of the next dollar rate increase. Again, we'll typically see the dollar drive down today. So there's a couple of different areas where it could pull back down to. But right now, looking at this, I would say that I'm kind of more bearish today with where the dollar could potentially go. Right. So we'll see how it rolls in and everything else. All right. So there's also, we got that continue to push up again, and you can see that this one really kind of turned and rolled at 6:30. We were at a racetrack, so it's an interesting spot where it rolled. Typically, you don't see those as much, but what I will say is now that we have one area to go through, it's going to have to fight to get through there. It makes the area up top a little bit better. So I'm going to mark an area up here that I just think we need to bring attention to. Next time it punches through, it should pause and go higher. I think we start looking for shorts up top. I think we start looking for areas around here around 70.11, okay? And again, we had a nice drop at base, and really this was kind of like a Harry Potter. If you look at this, you can see there's a lot of basing in this area right here, right? Base, 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 and it blew through, and it ended up slicing through a bunch of this, hit a second one, went down, and then kind of reestablished itself down low. So I'll remove this just so we don't confuse people. I'd say really the top and bottom levels for me on this one are probably these two, and we talked about this being a profit target. I would say right now, kind of top and bottom, and we're really like at the 50% mark, so kind of hard to do much with it right here. 70.11, 68.90, and if you run some fibs on this one, it's probably coming up to a level. Yeah, it's probably gonna, like I said, if we see some more weakness, I would say that you're probably gonna have some buyers coming in that area right there. Okay, so if you're looking for a near-term bounce, maybe a 1030 reversal today. If we come down, I could see it bouncing off of there. You know, sitting right there. And this could even be one of those ones that really with the news from today till tomorrow, I mean, there could be an opportunity for it to bounce off that level, go back up. I don't think we make it all the way back up to the 70.11 before news tomorrow, but, you know, we're going to leave that one right there. Yeah, we're going to leave it like that. So, yeah. I would say look for a 1030 reversal today. Some potential around a 69.41-ish. I don't know if I'd use this as a top. Maybe. If we rally and kind of grind our way back up tomorrow before news, there's maybe an opportunity here. I'm going to leave it yellow just because, again, I kind of want to see how it arrives in the European session. But potentially, again, for news, and again, we know where the news is coming in. It's coming in right. Oop, not that one. Right there. Right? I think that's an important level to watch out for. Yeah, non-farm number. So Aussie dollar definitely has the ability to pop either way. And again, this could be a good one depending on if we have continued pound weakness tomorrow. Okay? So a couple different plays, but 69.94, right? Again, near term, pullback, right? That's an uptrend setup type scenario. And again, we've broken through some levels, so it's a little bit outside of that range. But this is what we're looking for. And again, pulling back to something like a 50 where we have an area of basing and confirmation, typically pretty good. All right, this one, look at this. I missed it by just a little bit. It's like, oh, man. We were looking for a level here, and we're like, we're looking to get short. We're looking to get short. It got front when it came back up, and it's like, we needed to punch through. It ended up going higher, and it looks like it needed the 61.8. And again, this is probably one of those technical things that people, and this happens sometimes. It did break through the top before crashing lower. I would say right now the Aussie for me is in kind of a short scenario, but it's a little bit chunky, right? What I mean by that is, again, it's an area where there's basing. It's pulled back and hit it, and then hit it again, and it really pushed deep again, and then hit it, and it's basing in there again. It's giving all the signs that it's going to go back to the downside. Now, we just said over here that it does need to move a bit more to go down on this one, and again, it's the dollar versus the yen. If this comes down and we have dollar-yen strength, that also coincides with yen weakness. That could help us on this side also. So, it's a very small level of risk on this one. We're only talking, well, I guess it's not that bad. It's about 18, so I guess that's probably more what the chart should look like. The thing about this one is there's a level sitting right below it, right here. So again, with this taking a bounce down, it could potentially hit and pop. It's not the smoothest ride down. And again, we know it bounces off specific areas. I'd say the two things about this one is, one, we expect to bounce off of this level. Okay. Two, here's the profit target for the next level, right? It's there. It's, I like the trade. I just think there is more than like the normal trade we set up. I think there's probably a little bit more risk in this one, right? But I mean, does it come down and base in this level? Sure. That's. I mean, it should bounce off this level. Is that the bottom? And will that be the breaking point? Sure. Right. Something along those lines. All right. So it's kind of set there. We've made it through the initial push. We'll see if it continues to go through at the end today. But Again, I think that's kind of probably the best opportunity we have for that one right now, as far as a short here. And then obviously we have the big racetrack down here, the 9160, the break of 9162. Up top too. I mean, we could always move this up and readjust it for this kind of top section, which I think makes sense. Again, we were looking at kind of the old level here. It had been hit a few times, so we knew it wasn't fresh. There's no level here, so this is a brand new level that was set, and it's probably more just a 61.8. And again, the fact that it was like 6 o'clock, 5 o'clock or 5:30 in the morning, 6:30 in the morning. Actually, 5:30 reversals right here, so it turned just a little tiny bit early. And remember, 5:30 is Europeans 10:30. Oh, Mr. Buddy. All right, so it looks like we got Buddy for the morning. So I have to protect the new microphone from him. But I do have the old one that I can give him. Oh, what's this? What's this? Here you go. Or you want something else? Let's see. I will give you... What's this? You want this? We'll see. He's like, what is all this stuff on your desk? I haven't been here in 2 weeks. But anyway, I think there's a short opportunity there. If it bounces, that's where it's going to take its bounce off. The question is, can he eat enough of those buyers up on the pullback to be, a good level for us to turn and roll on? Now, euro dollar. Yeah, euro dollar. There was our 10:30 reversal. Yeah. So, talked about the level. Let's see. We missed it by 6 pips. So, got close. We knew it was there. We knew it was a little bit risky. We knew this one here, we're going for the confirmation, but we knew we had some levels there. We also knew it was the 50% level. So we were looking for just a little bit more. And I guess you could say that this is, conservative greed, maybe. Maybe conservative greed is what it is. We knew there was a level there, and we knew there was a 50. We knew there was a potential for it to turn and roll. And again, we mentioned it yesterday. And again, all it did was come back up. It used the same level that it broke through here. It based in it, and then kind of gave us a Harry Potter to retrace the last push down again. So, yeah, decent trade. You guys absolutely could have got some trade setups out of this one. Again, this one rose another 40 pips off the top side. So, definitely get some good opportunity. So I think we were probably just a bit too conservative in it. And we even talked about, hey, listen, the 50 is right there. It is 10:30. We are going into an area right now, but let's just go just a little bit more. We got a little bit too greedy. It happens. It's greed, C'est la vie. Here's where we're currently standing. And again, I think it's important to point out that, again, the peak of this also happens to coincide with a 50. So let me move this over here just to kind of clear it, right? And we go from top to bottom. You can see that the 50 also happens to be sitting at a level right there. So again, this one is kind of that euro strength, kind of dollar weakness. Again, I think this one has the potential for a reversal back in the other direction. So let me put this here as, what are you doing? What are you doing? You making noise? You making noise? Yeah. He's more vocal now. It's funny. In 2 weeks, he's a lot more vocal. There we go. Profit target wise, I'll put some of these on there. I'm going to throw it. Again, this is one that's completely up to you guys. I wouldn't just throw this out there and be like, yo, take this trade. It's not one of those. Again, I think the timing comes to this one a lot. I'd really like to see it go up a little bit more, but this 102.04, it is a level, nice confirmation off. If you do get into it, look to take profit down here at 101.56. Okay. I'll also put one up here too. Right there. All right. You're a pound. So, we talked about this one being able to drive down. We talked about it maybe pushing up yesterday and then driving down. It did. It drove up. It drove down. It didn't make it all the way back again, but if I remove this line or just delete it, how about that for a touch? How about that for a touch? So, again, trade is over now. This was a big runner. Almost a 1 to 10, 1 to 9.7. So, again, we talked about this. What were the 3 scenarios? It comes in as expected. No problem. Got it. Already factored in the market. There would be retail traders trying to get into it. It was a short trade. If they only did 0.25, that's a big disappointment. Also, short, right? Again, short pound, right? Not short this pair, short pound. If they raised it 1%, obviously that would have been a huge surprise, and we would have saw the opposite reversal of this one. So, pretty simple trade. And again, I love this one. So we talked about it coming down to that level. Oh, it's not gonna let me do it. I deleted it too much. Anyway, trade's done. Not much you can do with it right now. Whoops, not that one. What? What, buddy? Right there. But yeah, look at that. Came right back down and grabbed that level. So it's done. It's out right now, but hopefully you guys are able to grab this one. If anything, I would say, watch out for some levels here. There's an old level that it literally just banged off of here. It was a position that we talked. Actually, this one's probably over now. Yeah, it's already over on the other side. So it's hit on both sides at this point. This was an old Harry Potter trade that we had. We never got a re-entry. We never got a re-entry again. And if you brought it across, guess what? We just tagged it right here at 8 o'clock, and at 9 o'clock, you were out for the downside. So technically in this one, we've zinged it on both sides. I would say look for this one to stabilize up top and probably start to come back lower. The UK, obviously, recession, pretty much everybody knew that. That's kind of where everybody's going to be driven. Doesn't mean they're any worse than anybody else, though. So, I think the EU is not in any better of a situation, if not worse. Because they're still going to have issues with gas supply and other things. What's this? Oh, what you doing? Okay. So, hopefully you guys grabbed that one. Euro yen. So euro yen, we talked about a level just a little bit higher. It ended up having to give us the base. It's like, it hit here. Technically, there's your 3 hit, and it came back down again. So this is the 4 hit. You expected it to break. It broke through the top and then kind of gave us a little red, green, red action there. And it's an interesting red, green, red because there could be a case made. Well, wait a second. There's a level right there. There is. You're 100% right. But we got some chop to go through for this one on the downside. So we were talking about short, but we didn't really necessarily have a trade set up on there from that level. Again, we got the hiccup down here too. Dink, dink, dink. What? Let's see. What else can I give you? You're tired of chewing on that already. Yes. Oh, here, you want Asher's card? Here? What's this? Is that brother's card? Ooh. They're so easily amused. I like this one bearish. Again, a couple different pairs. We've talked about the yen, potentially pushing back to the downside. It looks very similar to the Aussie yen, where we had a level and again continue push down. So, yeah, the turn was there, but for me, it would not have been an entry whatsoever because again, we had a base right below it. It just didn't really have any room to run. We knew the level was there. I mean, we're talking 30 pips, but the risk level on it that we would have to take was a little bit much. If you wanted to really get aggressive with this one, again, 530 is, let's put the thing, 530 is right there. So you are looking for reversals at 530. You could have taken this one when it pushed down into this green and said, okay, there's our new top, right? We're opening all the way down here. We've left the area. We're expecting, could this be a potential, where the reversal comes in? Yeah, it did. And it pulled back up, grabbed it, and all it did was retrace right back down again from really this kind of 1:30 in the morning push. So there was a trade in there. And again, there was a big level that we had to use, and we had the confirmation, but we also had 1, 2, and 3 hits. So we knew that really we were starting to push it, right? We were starting to get long in the tooth on that one. And then we got it up here, and then again, the red, green, red, the push. The last red really wasn't here, but we were already looking for that feather to go higher opportunity. So, again, out now, I would say bearish on this position. Again, I'm kind of bearish on the euro in most pairs at this point, but I think this one continues to push back lower and probably finds buyers down here at kind of right around 135-ish, right? 135 is sitting kind of right there, right? Right there. So I would say that this is probably where we see it push down to today. Not enough room for me on a runner because, again, like I said, it's got to chop through here, chop through here, chop through here, and there's a level there. After that, I think it's clear sailing all the way down to 133. But I think we have the ability to get down. I don't know if we'll make 133 by the end of the week because we only got one more day. How big is it? It technically could do it. That would be 2 days of 130. Nah, it's probably more of a next week thing. Kind of like this pair for next week. What? You want to get down? Hold on one second. Let me put him on the ground so he can walk around. Yeah, so kind of like this next week, kind of shooting for 133. This could be one of those Sunday night trades that you take a look at it and roll with it from there. So, yeah, how about that? Did exactly what we talked about. Driving up in the early morning hours, came right back up to a zone. And again, when this has already been a zone, we were doing nothing but looking for shorts. And again, the short came in right there. Monster runner. I mean, again, it did spike up, which again is all the retail traders starting to go in with a buy, and that's where the trap gets sprung, and it just drops. 120 pips in almost instantaneously. Position is out now. Not much we can do with it right now. And again, target was supposed to be 120.96. You can see we went past it. Down another 20 pips or whatever, down to 120.70. I would say today, I mean, again, they've kind of smashed through the bottom of this. It's actually right there, but we've had two kind of strong hits in at that level. We'll see. I think this has the ability to kind of deteriorate today, at least until non-farm tomorrow. I'm kind of wondering if we can get down into really this range in here. Right, if we can get down to this level, I think potentially it gives us a setup for non-farm payroll. Kind of the same thinking with today, where the data that we get tomorrow, the data we get tomorrow comes in as expected, and people are like, "Oh, okay, so that means it's going up." It's like, well, they already expected that. So this was obviously, the pound was the easy trade of the morning. Not much you can do with it right now. Does it retrace fully back? It may, right? It may. I don't, as far as a reversal level, it is a level, but it's kind of one of those things. It's like, it was a pretty easy retail trap, right? And the question is, do we slam the dollar with this much weakness the day before non-farm payroll? That's a good question. It will retrace as profit taking comes in. Can we retrace? Can we slam in 100 pips worth of dollar weakness from now till non-farm? And again, not just dollar weakness, but it is also obviously preparing it for non-farm data. It's an interesting call. I don't know. Like I said, this was profit target first, not long. There is a parabolic retracement move in here. The other thing that makes me wonder on this one too is if we're going to actually get a retracement on there is the timing of it all. So normally, a lot of times we see parabolic retracement type moves. They're based off of news, but they're based off of news in normal hours. For European session, it's like 3 o'clock in the morning, right? It's associated with like the European Open. And for the US, it's either 8:30 or like 10 o'clock, right? So we see these big surges. And again, it coincides with reversal times. Because this was a 7 o'clock in the morning release, and again, you're seeing the profit taking come in, it's 10:30. We're in that 10:30 window right now. What does the reversal look like from here? Because it's already started to move back from the profit taking, again, the parabolic move. But really, since the U.S. session came online at 8:30, it's been nothing but more or less an uptrend, right? So technically, the reversal would be a European session, a U.S. session reversal, not a European-based news move. So a little bit different here. And again, we've talked about the rules in that class about how, there are setups, and we talk about fundamental changes in the market. Interest rate rises are a fundamental change in the market. Recession, obviously, it's a fundamental change that's coming for the market. So, yeah, I wouldn't say that it is probably the best one, but non-farm does actually kind of does help it, right? So, I mean, if we can rally back up, probably, tomorrow for the news, right? We can throw this on just to make it a little easier to see. If we can rally back up, and maybe it's a slow grind back up, and maybe tomorrow it's like, yup, look at that. It was a full parabolic move. Again, it's set up for a dollar strength-based non-farm payroll tomorrow, right? But it needs to go all the way back up again. It needs to move from where it is right now. 94 pips in the next 24 hours. Or next 20 hours, right? So that's a lot of dollar weakness. That's like, that would be considered like the dollar collapsing with no real dollar-based news today. So, we are, Messer should be, Messer's 12? Yeah, 12. Yeah, it's a hard one. That is a rough one. Yeah. So, all right, pound yen, also monstrous move. We talked about it going up. It ended up stabilizing and then punching up. So, if I move this over here, right? If I move it to there, then we're good. I just said, yeah, it will grind its way up, and it went down and then went up. But this is what we're talking about. The European move started right here. There's the European market. drove it up for the big news release, came in as exactly as expected, and where did it stop? Right at the 61.18. So again, funny how these things work out that way. And again, not really any major surprises on it. And it's funny, I even drew the arrow to right here, and it's literally how much did I miss the arrow by? 14 pips. That's not too bad in reality, right, guys? I mean, that's how much I drew it, and I missed it by 14 pips. And overall, that's a 216 pip move. So, not bad. Got pretty close. And again, I actually probably had this a little bit lower, but we knew where the start of the move was happening. But yeah, so again, the trade is done. This is what, kind of stinks sometimes. You get in the chart school right after, the actual move hit. It's kind of like, well, we can talk about the trade setup because it just happened, but it's over. Can't do nothing with it now. You guys should be, drinking, mimosas and Bloody Marys at this point. I do think, again, watch this level. If we continue to see this pound deterioration, and again, another scenario where the yen is in a position where we're kind of set in that Harry Potter where they continue to drop lower, there is probably another trade in here. Now, I would show, whoops, not that way. I would show a little bit more caution with this Harry Potter just because we've had such a monstrous move in the yen already. And again, the yen is known for monstrous moves, so that's nothing that we haven't seen in the past. But what we're going to need is we're going to need to see it come down and kind of stabilize and base a little bit here before bouncing and then pulling back up. And then again, we'll get our established level of risk. Because this level was an old level, and then it was a deep bottom. It almost broke. And then it was a deep bottom, and it did break a little bit. And now we're dealing with something like this, and we're venturing back down to 160. So I would say, the pound obviously has the ability to move. It has a much higher ATR. Let's actually check. What is its daily ATR right now? 206. So it looks like 206 is its current daily move. 206 from here. 206 brings us here. So and that brings us down to 159.60. So can we hit this one, drop it below 160? What, buddy? You want daddy? Here. Oh. Here, let's get this ball over here. Can we get down to 160? Yeah, I think so by the end of the week. I think this one has the potential for it, but we need to make sure that we can, again, stabilize just a little bit first. What's this? Oh, is that a lacrosse ball? You're going to try to eat it? It's a ball. You can't eat it. I think 160 is on the radar for the pound yen, and I think that justifies with the yen strength that we're seeing across the board, as well as the continued pound weakness. All right. Dollar CAD. Look at the chop in this one. Ding, 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 ding. Still no, we're really, really interested in this one. Yeah, it's kind of like, this is watching the paint dry. It's like, just go to one of the two levels. Like, I don't, like, this entire range is, it's a 40 pip range, but it's like, there's so many hits at the bottom, and there's so many wicks, and it spikes up. It's like, yeah, we're moving. And never mind. Yeah, nope. Yeah, nope. So, really, on this one, I kind of hope that we see the dollar weakness come in for news. News is there. I'm kind of hoping from now till then it does one of these things where we start to kind of drive down because I think that this one has the ability to kind of go up tomorrow, right? And again, this one right now, you're like, well, it's really choppy. Gold is down almost 1% already today, and it's this one's moving a little bit, but it's at 0.07. We're at 0.07 since yesterday. Total in 24 hours, it's got 9 pips. So, here, you want this one? Here, you want to go in your extra saucer? Let's do your extra saucer. It's been 2 weeks. It should be so much fun because you have no idea what it is. Here? Hold on one second, guys. Let me throw him back into his little, his baby play gym / prison. Because that's kind of what it is. Oh, here you go. Put your feet in there. Put your feet in there. There we go. Oh, look at all that fun stuff. Look at this. Whoever invented these things is great. You just spin them around, and it's like, oh, here's a toy. Spin them just a little bit more. Oh, it's a new toy. And you spin them again. It's like, it's another new toy. It's another new toy. Yeah. So, All right, so yeah, so dollar CAD. I mean, we're talking about 11 pips worth of movement in the last 24 hours. There's nothing really in this one. There's no really trade setups. Again, we're kind of in that 50% range from the last push, and you can see how much channeling it is. Every time it pops, it gets pulled right back in. So it's really just there's so much better opportunity out there right now. I'd love to be like, obviously my wife is Canadian, so it's like, yeah, this is great. It's just not. There's just not enough there. I really wanted to go to kind of one of the two levels. Um, what? There. There, you pop the lights. So, I'd like for this one to drive down, and that's kind of what I see in this one. Is it driving down a little bit? Can it get all the way down? I don't know. It's quite a move. It's a 50 pip mover. I mean, it can do it in the day, but I kind of like the dollar CAD for non-farm. Again, dollar tends to be a little bit more resilient, even if the data is bad. Be like, oh, this is bad. Yeah, if it's bad, again, that should send oil down. Like if it's more recessionary based data, that's going to also lower down oil, which also hurts the CAD. So bad U.S. economic data, not necessarily the worst thing for this pair. This one is a little bit more insulated than other pairs. Now, dollar Swiss, we were calling for down, and you guys can see it drove all the way back down again. It did turn yesterday. It was the 1030 turn. So, yeah, I was like, God, if this could just get a little bit farther. Like, the 1030 candle is right there. You could not time this turn anymore. It was like, just go just a little bit more. What? Uh, uh. What's in your mouth? What are you eating? Spit it out. Spit it out. What are you eating? No, you hide it in your cheeks. There we go. Oh, this is. Where did you find a tissue? Why are you eating a tissue? Here, play with this. Play with this. Here, play with that. Um, yeah. So again, Taiwan, tack one up for the 1030 reversal, and we talked about it yesterday. Being a zone, we would see buyers step in, and it was sitting right there. It was like, oh God. I mean, literally. Like I said, I could not wait for this week to be over, and then I have like 3 weeks before lacrosse craziness happens again. Like this is it for like we had 2 sets of tryouts, and I guess we'll have a supplementary tryout next week, and then I actually play lacrosse. I'm actually in a tournament next weekend or next week/weekend, but I swear if I had the extra time right now, again, if you guys are not looking at charts at 1030, I mean, it's just another example of a huge push up in an area of a zone. And again, you can see if anything matches up and then just taking a ride in these things back again. I mean, this is even the dollar Swiss, right? And this is 75 pips from where we are now versus where we were yesterday. And we talked about the levels that, we needed to hit. Again, we hit the first one. Second one got blown through. And then, again, you can see the basing on that same level. And then it actually retraced. And you could have actually taken a trade if you wanted to, right off of that level right there. So there's the second level, right? There's your second level, right? Should be even from the sellers here. It broke it. It came back up. It based in it saying, they're back. And then boom, entry and it continued. So there's been a lot of shorts on dollar Swiss, right? If you got to look right now, we normally talk about the dollar Swiss being boring. This is so much better than the dollar CAD right now. So, and again, now we're basing back at that original range again, and that's why it's hitting. So, I think we have the ability to come probably back down in the 95.40 range, right? 95.40 range. I think it's pretty decent. So, yeah, a lot of trade in this one. So, I'd say this one is good. This is like a million times better than the dollar CAD right now. And then dollar yen. Okay, there's the zone we talked about yesterday morning. We were sitting here yesterday morning, right? Here's 10 o'clock. So 1030 is the red candle next to it. Actually, the 1030 candle is the green one, actually. Same call. This one went down 100 pips from yesterday. And then again, hit it again this morning at really the 530 range and dropped again. So, what? What? Here, have this one. Take this one. Ooh. Yeah. So, again, nice little roll. Another 1030 reversal on this one. Kind of same thing. Waiting for it to come down and break down here at 132.50. I want to see what it does there, and then again, eventual short over at 132.12. So I like this one short as well. Again, same thing. We're seeing the yen getting some strength back and forth. Again, we're seeing some dollar weakness. It will probably find a bit of a reversal, but again, from yesterday, we had that level marked off, hiding right below the 135. Right now, we're kind of in the middle. A little bit of buying right here, but I'm not quite ready to call it a bottom yet. I'd like to see it continue to go lower, particularly in regards to non-farm. I do think that this has the ability to spike tomorrow for non-farm. Again, I got to see what the data looks like. I want to see where the Europeans drive it because obviously the Europeans know the data ahead of time. Yeah, that's kind of where we're at with this one. Not as exciting. So again, yesterday would have been the short back to the downside. All right. Bitcoin, again, stabilizing right on that zone. Totally perfect if you're a crypto trader. Again, you're still good. Look for this one to break down below 22,600, and then that's where it's time to start shorting. Ethereum. Hold on, I have to give him something else. Boom. Ethereum's kind of the same idea. Again, we know we have two kind of smaller levels, but I would say watch out for the 1580 range. That's where it's time to pull the trigger short. For a Dogecoin trader out there, kind of the same thing. We have one in here at 06512. Again, racetrack scenario, potentially going down as far as 6285. So you got movement there. Talking about oil. So we talked about oil going down. Yesterday, really we had the initial push down, and there was actually the surplus was pretty decent amount yesterday. And it's just continuing to roll. We are at an interesting spot now because we talked about there's two levels where buyers have stepped in the past, and both these are in the 89 range. Now, we are in the U.S. session. It is driving lower. Part of the reason, and again, a lot of this is this kind of 530 window down. What? What? Part of the reason why we're seeing this continue to drop down is you have a central bank president or governor basically saying, yeah, we'll be in a recession then. The R word is not good for crude pricing. We know that OPEC is going to increase supply or increase, I guess, production by 1 million barrels, as well as you have a country going into a recession, which also tends to be bad for demand. So those are both two different factors that are leading this lower. And right now, I would say that, in this case, I think that this is 100% justified breaking through this 90 mark. Not because I like cheap gas, but because, again, they are increasing supply. They say we're back up to pre-pandemic levels, but there's more coming. More nations will go into recession as we're trying to, fight inflationary pressures. So, I think today is kind of justified with this price action. Although we had this one marked off, we kept it yellow, and it's kind of risky. I think 87.36 is really probably more where we're going to take a bounce off of today across here. And it's been a long time since it's been down there. So let's see. Yeah. So yeah. Yeah, buddy. I know you're mad. We're almost done. I don't want to see it bounce down there because look at the fib. This green line right here is the 23.6, and that's where people will be looking for a trend continuation line at. Right now, if this is the true bottom, there is a small level there, but for us to get it in kind of this meaty level right here, which I think is good, we're bringing it down to really kind of this 87.50-ish range. And then I think there's a conversation that needs to be had about, hey, listen, if we pull up to this zone right here, you're going to have, and again, oil is a very technically traded market. It's very short term. It's not like a long term market. Okay. Come here. Come here. What? You want to teach? Is that what you want? You want to teach today? Do you want to teach today? You just want to hit the buttons. I'm going to have to get him a keyboard. Jen, you guys remember when Jen used to hit the keyboard? It's pretty crazy that we've been doing these long enough now that my 4-year-old, you're like, hey, do you remember when she used to sit on my lap and had her own keyboard? And now I'm doing it with another one. It's like, hey, I need to get Kip a keyboard. If this brings it down where we bounce off is 87.50, all of a sudden the 23.6 comes in right around, and it's right at $91. So, no, you don't touch this microphone. Where's the other one? Here. You want this? Here, this one? Yeah, you can. Yeah, you want to pull the one off the headset. No, you can't touch that one. You can have the old one, though. All of a sudden, the 23.6 pullback becomes the $91 mark, right? I missed it by 6 cents, but it's okay. You guys get what I'm saying. That 23 comes in range as well as an area of sellers. I think that's an area where, we needed to push down a little bit more to form that base, but everything today is justified to the downside. So I think 91 is a magic number on that one, but I'd like to see it get down to 80, 87.52. Get a little bit of a push, and again, this could be any reason why it pushes up. But I think oil is, again, we are definitely in the bearish cycle. Even saying that demand is back, 100,000 barrels is not a lot, but it's still a positive. And I think this one continues to drop. Now, natural gas is also dropping, but I say dropping, but we're up at $8, right? It's not the peak that it was the 970 just a little while ago in July. Yeah. This child is he was carried around for 2 weeks, so now he's like, oh no, where are we going? I want fun and excitement. Give me grandparent style, action and he's been crawling around the back like my in-laws Um, obviously retired. They have a really cool backyard setup in Vancouver, and they have like a million gardens. So he's literally been crawling through the garden, and obviously his sister is she's been picking gardens all week. So he's like, why are we sitting in an office? Give me the grass, the sunshine, the crows, you know? Let's say natural gas right now. Again, we took a big spike up yesterday. We are just literally dealing with a parabolic move on this one. It came up, it came back and grabbed the same sellers. We talked about the area already, and now it's retracing back down again. This is actually, I think, in my eyes, although it is still a geopolitical type commodity, and again, natural gas at $8 is absolutely ridiculous. You know, we were talking about getting it cheap at $6.50. $8 is still a ridiculous price. It's still extremely high up here. I think a lot of this one right now is kind of the same thing, like, recession? Now, natural gas is a little bit of a different recessionary tool. Reason why is because people still need to heat their homes with it. You know, if you're not working or you're trying to save money, you don't drive places. So natural gas, so gasoline and oil in general is a different type of recessionary tool. But whenever we talk about energies, typically natural gas follows in the same sense. And we do have natural gas inventories today also. So, you know, that is something else coming into play. I haven't seen any headlines as far as... let's see. Yeah, I haven't seen any big natural gas headlines. Again, last week was like every day was like we're turning the pipeline off, we're fixing the turbine, we're doing this, and that's, you know, that's just politics. Not actually broken parts, just politics. One side flexing the power they have, the other side telling you that no, you should sell that to me cheaper because you're a bad man. No, sorry, no. So you're seeing this push back down. I think we will have a fast and furious. I mean, we're in August now. I think this is going to be like a get your popcorn type scenario event. Come September, when we start talking about what does fall look like and what a winter, you know, gas storage supplies look like. Yeah, because remember, the Ukraine is going to need natural gas also, right? You know, they're going to need natural gas also. Are they going to have enough? I don't know. And again, natural gas storage facilities are, yeah, I mean, they're a big target, right? They're a big target. So, and it doesn't take long for Russia just to start turning spigots off. So, yeah, I think September, the mention of fall and what, you know, what do you want? He wants something on the desk. I don't know what it is. Maybe he just wants to knock everything. No, you're not getting the pencil. The pencil is not yours. I think natural gas is about to get really hot and heated. So we'll see where it goes with it. But again, not really surprised at the pullback. It's getting jogged down by oil. Now, gold, you're seeing gold go up. Now, gold was continuing to rise from 1030 yesterday. And we talked about finding a top in this one. And again, some of this could be non-farm. But what we're seeing is, you know, you get that bad data out there. And it's like, oh, maybe the Fed's not going to, you know, the Fed's going to slow down because we don't want to cause a recession. While the gold people are like, inflation's going to continue moving. Again, 100% right. We're really looking for this to get back up in the 1800 range. If we could continue to drive up today and break through and get it to the 1800, I think this is one that you want to get short before non-farm payroll tomorrow. I don't know. Maybe non-farm blows it out. If non-farm blows it out, I'll tell you right now, gold is going to tank tomorrow big. If non-farm comes in, and again, the expectation for non-farm tomorrow is what? 250 jobs? This comes in at like 475 jobs or something like that, 475,000 jobs, showing that, hey, listen, they're hiring people back. We're hiring. This is good, right? Labor market is good. Gold's going to go right back to the downside. You know why? Because it justifies another big rate hike in a row to smash inflation down. But right now it's creeping because there's just talk of the data's not good. Maybe the Fed needs to slow. And again, that's all, you know, that's all gold traders need to, you know, look at is saying, okay, inflation is going to be able to, it's going to take a long time to curb this inflation. That, you know, they got to go slow so they don't shock the market. You know, there's still money to be made here. So I think it's decent. So I got the gold pom-poms on. I'm looking for that 1800 range. Really the 1797-ish range. About $3 shy of that $800 or $1,800, I think is where this one you got to crank and pull the trigger. Now, silver is actually moving less. And again, it's just choppy. I mean, we had this level marked off yesterday, this 2040. We had these zones in there. You know, it's hitting. Here, you want to get back down? Here, get back down here. You can crawl around this side. Oh, get your foot out of there. Whoa, there we go. All right. Yeah, I mean, it's bouncing off levels. We knew the $20 mark, and again, this morning it drove down, hit the $20 and came back up again. Typically, you're going to see silver 2 times that of gold, right? It's not. It's a little bit less. Buddy, what do you want? I don't know what you want. I don't know what you want. What? 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 I know. You want something, but I don't know what it is. You're not telling me what it is. You don't want up, you don't want down. What do you want? Say, I want my grandparents to carry me around some more. He was supposedly the prince. Everybody carried him around everywhere. So, but silver, it's not even doing. It's doing less than what gold is doing today. So the opportunity is just really not there in it. Um, I'd say be cautious with it, but kind of the same thing. I'm kind of almost feeling. I mean, I guess if the news is really bad, it can be a spike. I think the way to play silver tomorrow, if you're looking to play this one, look to see what the European market does with it. It should drive it in the right direction for us to signal where the reversal will come in for news. But I think of the two, I think gold is going to be a better one to trade tomorrow because it's going to be much more focused. Silver tends to be smaller investors. Gold tends to be bigger investors. And it's really going to matter what that non-farm payroll number is. All right. So, I would say this is more consolidating today. I don't see it breaking out of this range. It would be awesome if it could rally all the way up to 2073, but I don't think it's going to do that today. That's a 50-cent move with really, I mean, I don't know, maybe Messer says something that's really crazy. Um, yeah, yeah, maybe. Let's see. We got some mix over here. Let's see what the VIX is doing. Yeah, it did its opening spike and it's pulling back as it should. All right, let's look to see what the indices are doing. I love it. It's like, what? I got it, buddy. I don't know what you want. What? I know. I know. Do you want something else fun to play with? Oh, here. This is yours. This is yours. There you go. I just for 5 more minutes, and you're good. All right. So ES right now. Let's see. Let's drop it down to a 15 and see what type of setup we would have had on this one. A little bit of gap there at 815. Again, driving it down 930. Yeah. So this is one that you may look at this and say, "Hey, listen, this is a long trade, right?" And in reality, we talk about, kind of near-term basing. This is a lot of basing here. This is a lot of grinding through, grinding through. And the 930 candle is really sitting really right here. Like we've already kind of hit it. The 930 is actually, the green one. It based on top of it, but it spent so much time here and then kind of gapped up. I would say that it was really more of a short than anything else, but it really was not. I would say this is not a qualifying event. It's just not there. If anything, you should have already been short from the overnight, right? When you took that little gap into there at 8:45, I would say that was probably more of a trigger. And really, if it pulled back up, which it did, I'd say really it's more of a feeling for down for me, right? I mean, yeah, it did put a new high in, and then we kind of based on it and pushed down and kind of went off a level and then came back up and we gapped into it. And it's like, well, that's kind of good. And then again, red, green, red. I'd say this one continues to be is more of like a short feel today. Um, and that honestly has zero surprise for me if we're red today, just because with non-farm tomorrow, if we have a red day today, it kind of opens it up to be more of a green day, kind of feel good Friday with good non-farm payroll numbers. So, yeah, I mean, I wouldn't say there's any major driving factors in this one. This would not have qualified for an opening print setup today. Again, just by the basis of how long that thing based there and how little movement and really kind of explosiveness it had out of it. It just, I would say just not super exciting, and it's an old level, so we kind of knew that there was a break off of it. So yeah, nothing there. NQ, kind of the same one. Now this one was higher and driving down. Kind of the same feeling. I mean, it spent a lot of time there. And really, we opened all the way up here. So it was not an opening print kind of there. It did pop and then close higher. It probably made that in there. Let's see. It probably did it, but I don't really know. I don't like it as much. It's not as bad. 1 to 3. Yeah, 1 to 3. It actually did. It did actually go to 1 3. So had you trade this one in the opening print, I would say kind of same thinking. A little bit more aggressive. It looks better than ES does, but it's still kind of the same idea. And the reason why it looks different is this one never really had like a true test. Like it had like a really, really tiny test, I guess all the way down here is okay. But, really the true basing is there. There's your top and bottom and it ran it across. So it pushed deep in where NQ, here's the meat of it, right? The top bottom, the top and bottom candles are there and it rode it and then it spiked out of it. As far as entries go, would I say this is an A+ entry as far as opening print goes? No. Was it a B? Yeah, you could make the case that NQ was a solid B for this one. And again, it's out. But honestly, I like this one more for a short today as well, just by the way that it based up here. Again, there's an area right below it, but then we got a nice little push down. I wouldn't be surprised if we get down into this like 13,085 range today. Would not surprise me. And we've even talked over here. You can see that we have this little target right here. As far as when it finally did roll, that 13,015 was going to be where the target was. Um, what? You're not telling me what you want. I know it's 3 hours. It's 3 hours earlier for you. Yeah, it's 7:30, and you're awake already. Yeah, I know. This poor child. He spent the last 2 weeks on Pacific time zone, and now it's like 10 here, but it's like it's 7:30, and I've been awake for 3 hours already. So poor kid. Yeah, I know. Maybe we take nap. So yeah, I would say right now in NQ, yeah, this one of the two, if probably a solid B opening print setup today. The zone, the formation in the zone was better shaped than anything else. But I think overall target wise, I think we're looking to come down to the 13,000 mark today to probably test it. YM. Again, YM, we had an old level and we knew it. Look, road, 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 road. Kind of the same thinking in this one as well. I mean, if I block this area off as saying here's the major base, the 930 candle. Let's see. The 930 candle, again, it's going down, so we're looking for a pullback, really. Yeah, the 930 candle started here, so no, it was already past the zone it wasn't in. It was in the old zone, and it did give us a little bit of a pop, but kind of the same feeling. Look, we just broke through the zone. It's kind of like what the Harry Potter is looking for. We're looking for it to drive back into it, and it did, but it wasn't clean enough that I would have pulled the trigger today. And again, just like the other two, to me, because it's a level that we banged off of so much, we're looking to retrace back down again, probably to target. I don't even maybe all the way down here, but I would say first target on this one would be kind of looking for the 32,000, really 32,500. What? Yeah, 32,500 range, right? 32,500 range. So yeah, and then again, same thing I said in the other ones. Seeing this drive all the way down in preparation for a feel good Friday non-farm payroll day, it kind of makes sense. Negativity wise. And again, we're seeing a lot of movement now, so I wonder if something. Let's see. Is there some news? No, just accelerating. What? I know you're dying. I know it's so hard. Oh, I know. Natural gas came in higher than expected. Again, helping the move today. Um, now there's not really. I mean, I guess the trade balance. No, not the trade balance wouldn't do it that much. Yeah, there's probably something. There's probably a news headline out there. We don't have it yet. Oh, buddy. So hard. But yeah, I would say Russell wise. Again, it's almost the same exact thing. There's your base right there, right? 930 candle is really starting here. Wasn't really a fan of this one either. Again, it just hit this level too many times. And again, kind of did the same Harry Potter. So yeah, like I said, of the three, and I mentioned this yesterday, the Russell tends to have the least quality setups for the opening print. Again, it tends to be choppier, more sporadic. Again, you get a lot more wicks in it. And again, you guys will see once the course is out, but like, ES and QYM tend to be really great clean setups for it. Russell I could draw them on here, but they're just not as clean. They're much more wicky and just not as good looking. So I would say profit, if you are short today, be cautious with, 1895. Yes, almost done. I know. He's also got a little bit of fever too, so he's unhappy camper today. I'd say 1895 is really first target. Look for basing off of it. There will be some profit taking, but again, any type of positioning a bit lower down here, I think is is probably a decent level. Right, any of these levels down here are probably decent reversals for non-farm tomorrow. I'd like to see where the Europeans drive the Russell as well. There'll be plenty of action ESNQYM, but for Russell, there's a couple different grindy levels down here, but not an opening print setup. So, in reality, ES would not have qualified just from the zone. It was deep. Not my favorite. NQ had the best of them today, and had you pulled the trigger on this one, you would have hit your 1 to 3. And again, it came out at the perfect spot. That's exactly where you should have taken profit. It just happened to work out with a 1 to 3. YM, again, it was kind of already past it, and again, same thing. Boom, 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 boom. Not an area we want to buy off of, and it started actually already past it. So again, would be more of a short trade than anything else, but not really an opening print short trade. And Russell just too choppy. But again, everything's accelerating forward. What do we got here? Just some of these basic ones in here. You can see we missed the top yesterday by just a little bit. Twitter's got a little bit of an area, but let's take it back to a 30-minute. There. Yeah, Twitter breaks through this level again. If it breaks through 40.50, I think this one accelerates to the downside. That's not going to help NQ. Apple, nice little pop up. And again, we're sitting in a little bit of a zone right now. I would say that if Apple continues to, again, we're at the 10:30 time frame. If it doesn't reverse here, if it starts to collapse, I would say any of you guys that are out there trading some of these stocks. And again, this will accelerate the NQ down as well. You're looking at a 1 to 3 like there. Again, that makes perfect sense. There's your profit target. That's where your profit target should be taken in this case. So again, room to run with Apple. That doesn't bode well as well. And then again, a little bit of a gap higher. We already talked about this being a sell zone in Tesla. It's a little bit, it's up 0.13 right now, but if it starts to deteriorate, it looks like it could fall back into this 1880 range. And I think we talked about that yesterday too. 1880 was a big range. There was an analyst yesterday that said that that Tesla was overpriced at this rate. And I think they forecast like a 40% cut in Tesla price is what he sees where the target is. So that's obviously much, much lower than the 1880, but it looks like it's all on the radar. So look at natural gas accelerating back down again. And look at that. It's kind of funny. The news came out here, right? You're like, look at this move. Now, the news came out here, right? Here's here's 5:30, right? What did the Europeans know? Did they know ahead of time what the data was going to be? Yes. The answer is yes. Right? Much bigger, gas inventory than we expected. But yet, magically at 5 o'clock this morning is when it moved. And the data just came out. Yeah. So much for secrecy and non-releasing data. So they got it. Anyway, is crude doing its thing? Yeah, crude's at that lower level. Yeah, we're trying. We're breaking through. Come on, get down here to 87.50. So, all right, well, that's it for today. Yeah, like I said, Kipster is back. We're going to have to get him readjusted on time so we can be successful with these without him kind of bouncing around. I feel like there's a headline out there because VIX just spiked up as well. I mean, this is kind of for everybody, right? The recession warning limiting rate hikes, right? And that's just a generalized statement. That's not really specific to us. I feel like there's more out there. I feel like we're missing a headline. You're starting to see this pop a little bit. Not as much as I thought over there. What's the dollar doing? Yeah, dollar's holding firm too. So, yeah, we'll see. Like I said, non-farm tomorrow. That's what we're looking for price preparation for today. So, all right, let's go ahead and do the drawing. So we got 6 people in. Marina won yesterday. Who we got here? Eki, Marina, Debbie, Will, Ernest, Neuro. Neuro, you're back. You missed us. We missed you yesterday, Neuro. We're like, where's Neuro? Right? Yeah, we missed you yesterday, buddy. Don't worry. It was noted that you were not here. We knew it. And magically one of the girls won. So there was some conspiracy theory talk. Speaking of conspiracy theory, Melissa's cousin got Jen a new doll. The doll comes home and it's wearing a hat. Well, it's like a little tin, like basically, long story short, her new doll has a tinfoil hat, which I thought was hysterical. Jen doesn't know what it means. So I was like, why is she wearing a tinfoil hat? And Melissa's like, well, it was a little cup of like this candy that she had. I was like, oh, great. My daughter's dolls have tinfoil hats on. So that's where we're going. Yes, we noticed, Neuro. We noticed. Right. All right, here we go. Winner of today's drawing. Let's see if Marina doubles up. It's been a while since she's done that one. Or if one of the boys gets it. Winner of today's drawing is Ernest. Let's see. Ernest had a 25% chance of winning. So, and again, Ernest hasn't won for a bit either. Ernest, are you still out traveling the world with the kids? Ernest has got to kind of claw back some points here. All right. He's got to claw back some points. And by the way, Miranda, you won yesterday, and I gave you 25 yesterday. I went back and looked at it. So you're supposed to get 50, and I was just so used to doing the 25. I gave you 25, not 50 yesterday. I realized that in the recording. So give you those. Ernest is catching up. Look at that. He's right on Sean's heels again. He needs like 1 or 2 wins. So with that said, I'm out of here. Tomorrow, be very, very cautious. As you guys know, again, non-farm is a big thing. It's considered, besides an interest rate, obviously, because it happens more often. It's considered the biggest market mover for everything out there, both currencies as well as the indices tomorrow. The data is a little bit, I think, off in my eyes. Again, the 250 I think is a little bit low. Maybe I'm wrong, but I just feel that it's going to be higher than that. I just feel that they are just overly negative on the jobs numbers. And again, this number comes in good. That should be every reason in the world why the Fed is raising the rates even more. So, and maybe and not raising, but not slowing the pace that they're going. Because again, if unemployment stays at 3, I kind of feel like this is coming in at I wouldn't, but this way, I'm kind of looking for maybe a 325 here, and I don't know. I would say missing the high side is probably more likely, but if we get a 3.7 tomorrow, I'm not going to be surprised with the 3.7. Do I believe the 3.7? No, but wouldn't be surprised if we see 325 and 3.7. Okay. All right, with that said, I'm out of here. You guys have a great day, and I'll catch you guys tomorrow. Thanks again. Bye-bye.